Hello everyone, my name is Romy Acosta and I am the Head of Investor Relations of JOST Werke SE. Today I'd like to present to you the results for the third quarter of 2023. The third quarter of 2023 was characterized, and you see it here on the top left of the slide, by a different development in the agricultural business and in the transport business. While the transport business continued to be very strong and remained almost at prior year level with 242 million euros compared to the 244 of the prior year, sales in agriculture did decline by 40% compared to prior year, due to a weakness for demand in the market, especially for the low and medium horsepower tractors. Adjusted for a fixed, sales went down by 5.1% instead of the 10.7% that were reported. And we also did two acquisitions in the third quarter, that two companies, one called Crenla de Brazil that operates in Brazil, and one called LH Lift that operates in Finland as well as in China, and they were consolidated as of the 1st of September of this year. That means they contributed 7 million euros sales for the last months of this quarter to the sales. Adjusted for a fixed and this inorganic growth, the sales development like for like would have been 7% down compared to the prior year. And you see on the top right side of the slide how this development happened according to the regions. In Europe, sales went down by 10.6% or 80 million. North America was the strongest, affected by 18.8% down. Here, very strong fixed effects, almost of 10 percentage points. And in Asia Pacific Africa, we did see a growth of 6.6% compared to prior year. However, here too, very strong headwinds from fixed effects. Adjusted for that, the growth could have been almost 20% compared to the prior year, and those will come to the 292 million in sales. Despite this decline, we see on the bottom side of the slide that profitability improved tremendously, especially during the third quarter. You see that adjusted EBIT went up by 10% to 33.4 million euros, and adjusted EBIT margin improved significantly from 9.3% in the prior year quarter to 11.4% this quarter. Right side of the slide at the bottom, you see that a lot of this improvement came from Europe. Very strong profitability gains there, with adjusted margin going up to 8.7% in Europe. And last year's quarter, Q3, was at around 4%, mostly very strongly impacted by the Ukraine war and disruptions in the value chain. That has stabilized, but moreover, we've gained a lot of efficiencies in the transport side of the business, and our cost control measures for agriculture have shown a very, very good result, so that the profitability in agriculture continues to be on a very high level compared to prior year, despite the decline in sales. North America too show a very good development, with the adjusted EBIT margin remaining stable at very strong 10%. And adjusted EBIT absolute going down by 2 million, in line with the 20 million decline in sales that you saw on the top. And Asia Pacific Africa, adjusted EBIT margins continue to be the highest of the regions, with 18.7%. Here we had a very slight decline in the adjusted EBIT, and that was driven by the recovery of the Chinese market, with come at lower margins at the other markets in the region, so a bit of a regional mix, as well as the fact that in September we started ramping up the production in our Chennai plant in India, which was a greenfield construction that was finished construction in September. So we did have certain ramp-up costs that fell into the quarter, and that will phase out as time progresses. Coming to the adjusted EBIT for the quarter, 33 million euros, and year to date, you see that bottom left side, we are already at 110 million euros adjusted EBIT, with a margin of 11.5%. So overall, a very good development regarding the strongest profitability we've shown in a third quarter in the history of the company, given the fact that our business does have a certain seasonality, with the margins in Q3 and Q4 usually be much lower than in the first half of the year. And this was due, as mentioned before, to the very high efficiency gains in transports, as well as the effectiveness of the cost control measures in the agricultural business. The two acquisitions, Crenlo de Brazil and LH Lift, are very well on track regarding the integration. We are already in talks with customers, are looking for cross-selling opportunities, and they've been very supportive of our ideas for the markets and product expansion. So that too is going according to plan. Market expectations for the year are a bit of a mixed picture. Very strong markets for demand for trucks is still expected to continue. However, we are seeing already a softening in the trailer demand, as we saw already in the first half of the year. That continues. And the weakness in agriculture should also go on until the end of this year and starting to recover as of 2024. We have, based on the results achieved so far, adjusted our guidance and raised the adjusted EBIT guidance from low single-digit growth, which we were expecting before, to high single-digit growth, but with sales remaining on previous year's level. Before, we were expecting a slight growth in sales compared to prior year. Now we are expecting a flattish development, but due to the very strong improvement in the adjusted EBIT margins, should increase significantly compared to prior year. Before, we were actually forecasting for a slight increase. CapEx in line, 2.5% of total sales, and working capital should be below 20% from total sales. So that's it in a nutshell, the third quarter of JOST. If you want to know more, you can always check out our webpage or contact me directly. Thank you very much for your attention, and I wish you a nice day.